Alright, good evening everybody. We are approaching the 5 o'clock hour here in the central time zone, so 6 o'clock on the east coast. I just wanted to give you all an after market update here to kind of see what happened today in the markets and kind of see what you need to be expecting for tomorrow. Tomorrow is Friday, the last day of the trading week, and we do have options expiration tomorrow, so that should give us a little bit of volatility and a little bit of movement in the market and stuff. So we'll kind of see as people start positioning for the next month and they start rolling out of those February options, start looking ahead. So the S&P, and we'll kind of start here, of course, as we always do, and we're going to zoom in a little bit to a 3-month daily chart here so we can see the trade a little bit better. And I'll go ahead and get my tools up here on the screen for you, and so I can kind of point this out as I go. I just like to kind of recap here. We bought on this dip to the 200-day moving average. We bought it was 25.39 was the price that we were looking to buy at. We got that price. Since then, and I just wanted to go ahead and do this math with you just while I am sitting here, so that way you can kind of see it yourself. So we're now at 27.31. We bought at 25.39, so that's a 192 point difference. So we'll take that and we'll put it over top of that 25.39 to see that we have now a 7.6% gain. That is not bad for a few days in the broader markets. People look for 7 or 8% on an annual basis, and consider that great. So for us to get 7.5% in, well, what is that? 1, 2, 3, 4 or 5 days time, you're doing pretty damn good. So we ran in today into the resistance zone that we were looking at. If you kind of recall, some of my previous videos here, we kept talking about looking at this as a zone instead of absolute levels. The reason that we were doing that was because we had a lot of resistances coming into play here, so it was kind of a confluence of resistance there, as we talked about. So the first thing that we had, and whoops, I didn't mean to delete that, but the first thing that we had was we were going to be watching for some of these Fibonacci levels that to be taken out or to be resistance. We watched this one here at first. Let me make that an arrow for you. So we watched this one right here at first. It cleared through it, so we saw over here that we were able to get through it. We started talking about the 618 up here, and we also talked about the 50% because this 50% coincided with this 382 from this advance over here. So we thought that this would be a zone here that might be kind of difficult to get above. The markets actually opened up above it, and they dipped down into it and rallied back towards the end of the day. And we actually were able to reclaim the 50-day moving average, currently 27.23. We closed the day up about 8 points from that moving average. At 27.31, so that's up here. So from here we kind of start thinking about, well, where are we going to go to from now? As you know, just like in a advance, you look for the stock to go up and pull back and then go up again, and usually this pullback here is the 618 that we want to look at. So conversely, when a stock is declining and we want to start looking to short it, we see this decline here, and now we look for it to rebound into that 618 before it can continue lower again. So that's what it seems like it's tracking to do. We were able to take out that swing high today at towards the end of the day, and we'll kind of look at that. You know, we had been talking about this. Let me get my line up here for you. So we had been looking at this swing high right here as a point that needed to be taken out to change the trend, and we did end up getting a takeout of that. So now we got to start thinking about, are we going to be looking to buy this thing, or are we going to be looking to sell it? And I think in the immediate short term, like say tomorrow, you know, this might actually push on up into that 618 level. 27.42 is the level to watch there. So you know, we might push on into that area, but at that point I think, and even if we get above it, then I think we still fall, like I say, from up here, and to fall to where will be kind of interesting. And we can look at this again, like a different way here. So let's just say that today's high is the peak, and that's all we know for sure, because we can't read the future or can't tell what's going on in the future. So when we look at this swing here, and I'll give us a little bit of extra room here on the end, just as I just said, we'll be looking for a pullback now to the 618. This is where I think it actually fails. So I think we actually end up going up to here, and then we decline to this 618 level, which actually coincides with this 236 level. So that will be a significant little area there, but I also think that it actually will end up failing, and you know, and we will actually continue lower here. So Where are we actually going to continue lower to? We can go ahead and start putting some targets on there because we're starting to see some of these declines here. And so, like I say, if we're just assuming that today is the high, and we don't know that for sure, so we just have to kind of readjust whenever a new high is made. But we're going to look here at putting on our extensions for the 1272, 127.2 to be accurate, and the 161.8 Fibonacci extension. And so when we put those on there, and I'm going to change the color here for you just so you can see it better. But when we put that on here, we now have some downside targets that we can kind of look at. And the ones that I'm looking at here in the near term, or in the ones that are more likely to be significant, will be that one right there. And you can kind of see it. Let me get on out here to a 1 year. Because it does coincide with this low over here, so that's not coincidental. Like I say, the Fibonacci numbers are great for this kind of thing. So if we end up failing from here, we could be looking at a decline down to 2400. And if we get down to that level, it's 2411. This is 2417. So that'll be a zone that we need to watch for a possible termination of the move and a possible bounce back to the upside. Of course, on the other side of things, there's a very I think it's a slim possibility, but there is a possibility that the markets decide that all is well and inflation is not to be worried about, or whatever else it is they're saying is the reason that we have sold off like we have. And if that is the case, then it is very much possible that this market will get up here above this 50-day and then kind of bounce around a little bit for maybe a few days or weeks even, and then continue back to the highs. That is a possibility as well. The only way we'll know that is if we just keep up with it, and we have to kind of keep tracking this thing. Right now our buying or our moving averages are in a sell mode, so we are on the right side of the trade to be short. And like I say, we're going to start looking for some resistance pretty much in this area right here where we're at, up to 2742, 43 area, and even on up to this next Fibonacci level, which I believe is the 236 there, and we can zoom out and see it just to confirm that. Yeah, it's the 236. So just notice here, and like I said the other day, if you're having trouble with some of this stuff, just kind of look at some of the prices that have been respected before. So on this one right here, and I'm gonna get rid of this just because actually we'll leave it up there because that's going to be significant. So I can get rid of some of these other levels here just to kind of clean the chart up a little bit. So I'm gonna go ahead and get rid of that 382 and the 50. We are now pretty much right on top, but I'm gonna leave that there for the time being. And like I say, so if you're having kind of trouble with some of this, take a look right here and you'll see it. Anytime you see a price act as both resistance, and so in this bar right here, actually, and I'll draw it from the top. So right here, we closed above it. We kind of tested about that area, kind of pulled back a little bit, and then we were able to move above it, and then we pulled back to it, and then we went higher. So if you notice over here, when we started our decline, and this was, I believe, that Friday, we fell straight to that level. So that should have kind of signaled that this level right here is significant. And like I say, when you draw it that ways, you can kind of see it, and I'll make that just a line instead of an arrow because we're not really pointing at anything here. This is a significant level right through here because it was a resistance turned support, and now it was a support over here that failed, so it will again become resistance. So now as you kind of look at it in that context, you kind of actually starting to see all kinds of resistance zones that are piling up, and that's kind of why I think that this is just starting to get to a place where you just got to start jumping ship here. We can go ahead and make that range a little bit bigger just for shits and giggles here, but I think that, like I say, the 618, and they never move in perfect, they don't hit it perfectly. It's not going to go to 2742, 92, and then turn around and go back, and it may not go back at all. It may just keep on going, who knows. But this little zone here, I think, is where we got to start considering getting rid of this stuff. We can always buy it back later. I don't want to let a gain go to a loss, and we are up now. Even if you just bought with me, you're up 7.5%. So if average returns are okay for you, then you're up. You've already made your year, and you can stop and not have to do anything else for the rest of the year. That's a pretty nice little thing to do in 4 days. Then you can take 361 days off, I guess. Me, I can't do that. I want to make more and more and more. So what I'm looking here is that, like I say, we're going to come up into here, this 618, maybe as high as this 236 from that other move, but we are starting to decline. And I actually set a sell order up in my IRA today for some S&P index mutual funds there that are tracking the index, because like I say, I think we're getting to the point now where we're going to have to start falling back down. This decline, so people are kind of making all kinds of headlines. This is one of the things that troubles me, is when you see all these headlines popping into play. You know, there's a Kansas song, "Carry On My Wayward Son," and there's a line in there that says, "If I claim to be a wise man, it surely means I don't know." So, you know, all these headlines here, and I was going to pull a couple of them up here for you, and it was actually here. Let's see. It's time to short. Now, that's actually one I can agree with, and this guy, I actually do read him a little bit, and I kind of agree with that. But you see over here, and I was going to pull up, and I guess I didn't have it pulled up already, but so we'll take a look here at finance. Yeah, so now we start seeing, you know, it's pretty much a overall, pretty much everything's good to go, and, you know, the algos are trading again, and, you know, we're pretty much, the Wall Street is rallying, and there's all kinds of little headlines, and there were some other ones up here this morning that really cracked me up. But that oops. But like, say this one right here, that's pretty much asserting that the algorithms are doing the trading right now. We've rallied for 5 straight sessions because of technology. You know, there's actually quite a few headlines, and I'll have to kind of go through there and kind of find some other ones. But it's, like I say, I think that you're starting to see, yeah, see right here, what inflation? Apple and Facebook drive the rally on Wall Street. You know, I just don't think that it's a good idea to try to say definitively that you know exactly what caused a sell-off in the markets, because we don't really know honestly what triggered it, and we can speculate, and we could probably be kind of right, but at the same time, it's just, to me, it's not worth it. It's a fool's errand, basically, to try to guess it. So that's why we just go with what we see, and we react accordingly. And like I say, the market, the way it is acting right now, we continued today in this buying pattern, or this buy mode here, with the moving averages being, you know, in a bullish kind of stance here, and they gave us that cross. They took out that swing high. They took out these little smaller swing highs, and so we bought the dip and we sold. And actually, I guess I sold a little bit too early, and I mentioned that yesterday, that I may be selling a little bit too early, but I would rather go ahead and take it off the table, because I was not confident carrying it into the weekend necessarily, and I actually thought today would give us a little bit of a dip, but I was wrong, of course. But like I say, the moving averages, this open right here and dip made me kind of think that we'd probably trickle off today, but it just did not happen. We actually had buyers come in, and they were steady, though the volume's pretty low, so that's not really a positive sign, in the sense that there's a lot of conviction behind this lift up today. But we did jump from this 269 low of the day on the SPY anyways, up to 273 bucks, so we were up $4 from the lows. So that was a pretty nice little intraday swing, and the fact that it was just pretty much lower left to upper right, once we got past that sell-off, that's what you're looking for, right? So I just, like I say, when you start pulling out to longer time frames, you start seeing that we're starting to get into some areas here that are just loaded full of resistance, and giving the macro pictures, and giving the severity of this recent sell-off. There's going to be a lot of mom and pop investors, and that's not meant to be a derogatory thing, but there's going to be a lot of mom and pop people that are looking to get out of this thing, and they are the ones that are going to start selling as we start getting into this zone here. And I'm afraid that a lot of people have sold down here, which, you know, it's typical for herd mentality, I guess, kind of the way is pretty much what it is, but you need to take the contrarian view. You know, there's kind of an adage, basically, that whenever it feels like you couldn't be more wrong, you're right. So, you know, even though it was really hard to say buy right here, because you were in the middle of this, like, man, the markets are just falling apart, all is lost, we're, you know, going to hell in a handbasket. But if you remained objective and you used your data to make the decisions instead of emotions or thoughts that are based on emotions, you would have bought this because this was a good place to buy it, and you'd be looking at a nice gain. So, you know, the institutional money is also going to start coming into play as we get up in these levels here. There was a lot of bullish people on Wall Street, and a lot of bullish portfolios out there that were just thinking that this train was never going to stop, and now that it has, they're going to be looking for any strength to sell into, and that's where we're at right now. And you can pretty much call it 2750 basically. That would be a good level to sell at. Yes, you're 73 points below the all-time highs, but it's okay. So moving on here from the S&P, and we've spent a good moment here on the S&P, so I'm just going to kind of wrap this video up with a couple more indexes, and then we'll get into the trades in the next video. I'm going to put that together here in just a few minutes. But I want to take a look at the Russell 2000. This is one that's a little bit more broad. a little bit more volatile too. It tends to act a little, or move a little bit stronger than the S&P does. So what we saw with it was a high up here above 1610. I guess that's probably about what, 1612 or 13 or something. We had a high set up there. We pulled back just like the S&P did. It actually dipped quite a bit below its 200-day moving average. But if you had bought the 200-day, that was at basically, let's see here, we can find out real quick. You know, so on the day that it made that dip, it ended up going to a low of 1436. And on that day, the 200-day moving average was at 1462. So to go from you know, 1462 up to 1537, that's a pretty nice little gain. And let's just see. Yeah, so you're about a 5% gain. So it's underperformed the S&P on this rally back. But like I say, it dipped a lot lower intraday there that day. So I'm just going to get a little bit shorter term here. Excuse me. You know, it just like the S&P, it is in a buy mode right here. We've taken out the moving averages have flipped bullish. We've taken out the swing high, and we had a little dip here, but it didn't sustain, so we should have just kind of stayed with it. And you know, any little dip that we saw there was a buyable dip, and so like I say, the moving averages has remained positive at this point, and they continue to trend higher. And just kind of look at this from a daily standpoint, same kind of situation here. We're going to start getting into some serious resistance zones up here as we near this this 50-day moving average. And like in this one, and this is a picture perfect kind of thing to look at. Let's kind of make it easier to see. I'm going to kind of adjust a little bit of this for you real quick. So if you're taking a look at this this Russell 2000 now, and actually let me just get us a little bit closer in here so we can see a little bit better. Okay, there we go. So if you're taking a look at this Russell 2000 here, this 618 retracement is at 1547.31. That 50-day moving average is at 1547.36. So within 5 cents of one another are two major resistances, because like I say, we expect a dip, and then we want to look for a rally back into the 618 before we start looking to go lower again. The fact that this 50-day is sitting right here on top of it, I think that you're going to have a very tough time breaking out of this thing. So tomorrow, you know, like we might do this little push up, and it might actually close green for the week, and we might look pretty good. But if that's the case, then I think next week's whenever we will see it kind of turn around and start doing one of these numbers. And to take a look at the weekly chart just real quick so you can kind of see that as well. And we'll pull that up here real fast, and I'm going to zoom into 5 years because we don't need 10 years of data right now. You kind of see that this thing has actually touched a trend line support here, and if you kind of follow it up through here, we actually violated it. Now right now we've gotten back above it, but just the fact that we did violate it there. And let me give you a little bit better color to see it with. No, about purple. So as you see, you know, we've respected this trend line pretty much going back to January of 2016, with quite a few little checks on it and stuff. So we had one here, it didn't quite get to it, but it was close. We did have a check here, and now we're checking it again, and we did get below it. Now we're back above it for the time being. So if we can hold above this, especially this week and next week, then we might set the stage for a rally back higher. But at the same time, if tomorrow we end up pulling back down, or we end up giving up all the gains for the week and closing below this trend line, that really opens the door, and the Russell could be looking at a 200-point decline in the next few weeks to months. The next one I want to mention, because I did have a short play on this one, was the NASDAQ, and I will show you the index first, and then we'll go over to the Qs, because that's where I put the play on at. This is a weekly chart of the NASDAQ, and I want to go over to a daily here. You know, it looks a lot better than some of the other ones, just because it never did get down to that 200-day moving average. As you can see, we fell well short of it, and we put in a low, it looks like about, I don't know, 100 points above that moving average, or 80 points above it, and we have now rallied back. And I did notice today in this one, it has taken out the 618 retracement, so that's a good thing, but at the same time, I just don't think it lasts. I mean, I think it's just kind of outperforming the other indexes as we speak. So let me switch that so that's correct there. Yeah, so we took that 618 retracement out today, and we've pushed a high, and we pushed above it and higher, and so we have cleared that now. The moving averages are still in a sell mode, and so I think that we're just kind of getting this point that it kind of may move higher or sideways until the broader weakness catches up, and then it will move lower too. I do expect this one to ultimately come down here and test this 200-day moving average. So I bought puts on the Qs. They had not done so. I bought them the other day just as a hedge, and with today's rally, they obviously took a decline, so I'm sitting on a loss right now. But because my conviction is pretty strong that we will actually indeed see a decline, especially going into next week, I went ahead and added to that position, and for two reasons. One, like I say, I needed some short exposure here, and also the price was pretty cheap there, so I just went ahead and jumped in there and added a few more, just kind of pretty much average my cost down, and bring my break even to a little bit more favorable level. So if you look at this this QQQ here, I jumped in here today and I bought some more puts for 25 cents. I think the first ones I bought were 80 cents or something. And I'm kind of looking on my other screen here just as we're talking about it. Yeah, so I think I bought the first ones for like 80 some odd cents, and I went ahead and bought a few more yesterday as well for 30 something cents, and then I bought some more today for 25 cents. It closed today at 20 cents, so those ones I bought today are a little bit lower than where they had been, and that's because we had an intraday push to the upside at the very end of the day. This little breakout at the end is the only reason that I'm sitting on a loss on those other ones. But the volume today was kind of weak, and if you just kind of notice, that's another thing to kind of keep an eye on here. That the selling volume over here was very strong, and while we have had a couple of big days on the upside, the follow-up here has waned significantly below this average. So that makes me feel like that this is just a bounce, a dead cat bounce as they call it, and we will run out of steam here in the next couple days at most, and start pushing back down. So I think you can start shorting, especially like the NASDAQ. That's the one I'm using. You could short the Russell or the S&P or the Dow, but I just think that, and the Dow would be about like the NASDAQ. Either one of those, DIA or QQQ, you can short as a good way to short the market overall. I just like the Qs better because it's made up of more technology and biotechs and stuff like that, and some of those tend to be more volatile than the top 30 companies in the Dow. And let's see here, the volatility index, and I didn't mean to turn that on, but we'll take a look at this hourly. Daily basis, we end up closing lower, 19 handle, that's what we end up putting in. But if you kind of look a little bit closer term here, a little bit shorter in time, we're looking at an hourly chart here. You can see that after that pop happened the other day and pushed us up to the near 50, we pulled back and we put in a lower high, so this high up here was never violated, so we got a lower high right here. Now we have a lower low in place over here, and the moving averages are still trending down. I did jump out of my VXX yesterday. It looks like I would have made another $1 or so if I'd have held on to it today, but like I said yesterday, you know, it was one of those that I had more than doubled my money, and so I felt like it was 92%, so almost doubled my money, so I felt like I just need to go ahead and jump ship there. I think that any of these guys, like I say, now I'm starting to look to buy some volatility. I had a VXX put 39 strike that was underwater, and so I didn't just lose it altogether. I did go ahead and roll it out to next month because I think over time we will start, you know, volatility is going to fall. It can't stay elevated forever. And you know, if you kind of look back in history at some of the previous spikes and stuff like that, you will see that that's the case. That you get a spike and it's up for a few days and it tanks, and then it's up for a few days and then it tanks. And that's actually VXX, so let's look at VIX. But it's the same picture and stuff, so you get a spike and it sells off, a spike and it sells off, a spike and it sells off, so it's kind of a rinse and repeat situation. This has just been a huge spike, which will result in a huge sell-off. So I think that VIX, you can start looking to maybe buy some calls, or maybe even if the puts are, if it makes sense, go ahead and start selling some puts down at, say, like the 10, 9, 10, 11, $12 area. And I think those might work out, but I would rather just be buying calls. Probably up, and I bought the 35 strike calls, and I'm just going to double check myself here. Yeah, I bought 35 strike calls expiring on March the 21st, so that gives me at least another month. And the trade will profit if the VIX, and it'll actually profit before then just because of implied volatility, but it will profit if the VIX goes pretty much above 35. And since I paid, let's see, I paid 90 cents for it, so I really need it to get above 36 or 35.90. So that trade will profit on a spike up through here. So if something crazy happens and the market, you know, dives and the VIX jumps, then that'll be a good setup But I think that even if we just get a slight pop in the volatility, that call will jump in value. So that's why I've got that one. Okay, guys, this has just kind of been an index and market update overall and stuff. Like I say, I'm going to get another video together here in a few minutes for you that talks about the specific trades. We had a very good day today. Made a lot of money between yesterday and today, guys. I've pretty much made, and I'm going to do the math here in a little bit, and I still got one more day to go, but pretty much this has been more profitable than my salary at work. So yeah, I think, you know, if you're following me here, you could be doing some great things, and this is a portfolio basis. I'm pretty much up 15% overall in 2 days. So I think that if you're all not following me, then I don't know what to tell you, man. You can lead a horse to water, but you can't make it drink. Alright, guys, seriously though, y'all have a great afternoon. Be looking for the next video with some specific ideas and some moves that I made today. And if you're following me, or if you've got some trades in here with me, then you might want to watch that one, because it tells you that some of them you need to exit and or add to and or buy for a new trade. Alright, guys, take it easy.